Good morning, everybody. What's up? Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. It is an amazing day out today, and I'm certainly looking forward to all the things that are happening. One of them being that we are going to see the Tesla battery day, or not battery day. Hopefully, not a repeat of Tesla battery day. Let's be honest, right? I mean, I think that that's going to be something that, of course, is going to be front and center. Hopefully, we'll see. It's the investor day, I should say. Hopefully, we'll see something a little bit better than what we saw during Battery Day a few years ago. If you guys recall, I went for a full blown marathon live stream on that. I will be reacting to Investor Day on Tesla this afternoon at 3:45 p.m. Eastern time. They are set to start rolling out the beginning of their Investor Day at 4 p.m. Eastern time, and so I'll certainly be live by then. I'll be reacting to a couple of earnings as well, but we're going to be reacting to Tesla Investor Day too, which is why I put the poll in about Tesla Investor Day. So far, you guys have tuned in, and most of you think that it's going to help the stock. 8% say it's going to hurt the stock, and 38% say it does nothing. And historically, I think it has done nothing. Battery Day certainly sank the stock. People didn't like it during Battery Day. Just because it was so boring. Everybody was like overhyped, and then it ended up being that the only way that you were understanding anything that they were talking about was if you were also an engineer yourself. That was just miserable. Remember that? Like everybody was honking their horns and everything else to respond. Instead of clapping, they had to honk their horns because it was during COVID. Nobody was actually allowed to be with each other. It was miserable. But anyways, hopefully we see a better outcome today. Hopefully we hear more about the Cybertruck. And I think front and center, we're going to see a lot more of AI chat. We heard rumors that Elon is building some sort of chat GPT rival. So we'll see how that all plays out if we hear anything about that today for Tesla's Investor Day. But let's go ahead and take a look at the market overall. We're seeing a pretty significant drop here right out the gate. Manufacturing data has apparently sank the stocks right now, sank the market. Looking at S&P, everything was green up until then. S&P right now is down 0.2%. The Dow is down 1.17. NASDAQ is down 0.13%. So not really terrible, but it's giving back a lot of their gains. I mean, the NASDAQ was up around 1% at the highs this morning. So it's giving back a lot. But we'll see how this all shakes out throughout the day. I think that we could have a pretty decent bounce back March and April. As I had mentioned, we saw February get really rocky. And one of the big reasons was because of hot inflation data from January. And I think that we're going to see a much different picture in February than we did in January. Remember, we saw a lot of jobs lost in January, and a lot of layoffs in January. That's a lagging indicator. Obviously, we're going to see those numbers here from February here in March. So I think that that's something to certainly keep an eye out for. Remember, a lot of those layoffs, especially from the big tech companies, came with huge severance packages. I mean, Microsoft laid off 10,000 employees, and if you include severance, that cost them $1.5 billion. So it's about $150,000 per employee that's costing them. That is kind of insane. And you look at that, and if you got 4 months of severance, you're not going to claim unemployment for a while yet, right? So a lot of this is going to be lagging, and I think that we're going to start to see some of that during February's jobs report, and I think we're going to see inflation drop significantly in February as well. I think there's going to be some interesting numbers that we end up seeing. So make sure you guys are hitting that thumbs up. I certainly would appreciate it if you're coming in. Malta Goya, thanks for coming back to the Chaos Crew. I certainly appreciate that. I've been a Chaos Crew member for a long ass time. See that bull next to his name? If you guys want to be a part of the Chaos Crew, hit that join button next to subscribe. Appreciate you, my man. Good morning. Blue Eye said, I made a live show. What's going on? Snookeroo, Dollar Tree says, if you would, sir, thought they did well, but again, the stock dropped. Yeah, we can take a look at Dollar Tree. There's a lot of other stocks we're going to react to as well. Lowe's, Kohl's, Neo also reported this morning, and we can take a look at some of the other companies that Had earnings last night that we reacted to see if there's any kind of change this morning. What's up, Richard? I wonder if the YouTube notifications went out late today. I mean, I had this up about an hour ago. I feel like I have a pretty low turnout so far. That's all right. We'll give them some time to come in. Hopefully they'll show up. But nevertheless, let's go ahead and take a look at the stock market here a little bit and kind of give you an idea of what I'm talking about, just to kind of revisit the charts here. Let's take a look at SPY right now. Oh, this is Cole's that I just had pulled up, but I do want to direct us towards the SPY just so we can take a look at the overall market right now. And the S&P 500 is down, like I'd mentioned. The S&P 500 ETF is down 0.25%. But we look at the weekly chart, still very much intact as far as the upward trend from October. Nothing to really be overly concerned with from a chart perspective just yet. I think that if we start to see this break to lower lows, that's maybe when we start to think maybe change our tune a little bit. But I'm still remaining bullish as of right now because not much has changed, in my opinion. Not to mention, Fundstrat came out with some pretty interesting data this morning as well, talking about how, if you guys caught what I had mentioned in my most recent video about why I feel good about 2023, I gave you plenty of reasons. One of them was the rule of the first 5 days. So the first 5 days of the trading year were up above 1.4%. And that usually indicates historically that we have a fantastic year in the markets. When you look at it from a month-to-month perspective, January obviously ends up having about a huge win rate, about 86%. February takes a lot of that back, which we actually saw, 57% win rate. But then March and April, 100% win rate. So 100% chance that March is going to end green. And then April has an 86% chance that it's going to end green. Historically, we go back in time, we look at this rule of the first 5 days, and this is something that I think is I don't think it's worth ignoring. I mean, obviously, there's a lot of people that talk about how Tom Lee and Fundstrat they're all perma bears, blah, 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 blah. But you can't argue the numbers. I mean, they pull the numbers out, and this is very interesting. So I think that we could see a hell of a bounce back month in March, and it looks as if maybe that carries on in April. Now, May could be a bit of a different story. It's very similar to what February usually is historically when we're in this type of situation, 57% win rate, and then there's that mantra of sell in May and go away. The rest of the year, though, ends up being quite good. After May, in the second half of the year, I think that's when we're going to see some pretty significant moves. The average increase in the markets for March and April in this type of situation, in which the first 5 days we see a 1.4% increase in the markets, 3.1% for March is average, or median, sorry, and then 4.2% in April. So averages here are 2.6 and 4.0% respectively. That's still damn good. And so I'm still very much in the bull camp. And listen, maybe something will change. But right now, I'm not really seeing much that's actually making me change my tune. And you can take a look at the weekly chart. I think that this is something that I really like. Snookeroo just got mine. Nastra B said, anyone buying the dip on NEO? We'll take a look at NEO and react to those earnings in just a minute, and we can kind of have a discussion about that. Maltagoya says, I have some 390 puts expiring Friday, cutting it close. Yeah, no kidding. Bruce says they need more coffee to wake up. Yeah, no kidding from everybody coming in. January 2023, one of the best on record for sure, says Snookeroo. And then Chris Edwards says, so should I buy SPY calls? Well, obviously, I'm not going to tell you to just go crazy, but I think that your odds are quite good to go long on the SPY for the month of March and April. I hesitate when I talk about options just because they are so risky, but I think that there is certainly a compelling argument as to why we think March and April are going to do quite well. We can even come out to the daily chart and see, here's your daily chart. It's hugging around the 50-day moving average. And higher lows are still very much in play on the daily too. So I'm not saying that this is a guarantee, but I think the odds are ever in your favor here. Let me know what you guys think. I know there's a lot of skepticism out there, a lot of angst, people not feeling very confident in the markets right now, and I understand that, but cooler heads prevail, and I think that it's definitely worth considering buying the dip on the markets right now. In particular, small cap tech, I think, is also going to do well, just because we're still seeing a huge drawdown on that. 20% of small cap tech in the IWM or the Russell 2000 is still down 75% or more from their highs. That's insane. That's insane. Blue Eye says my portfolio is looking forward to baseball season. Oh, this is Jane. I know who this is. What's up, Jane? So that's my overall thesis on the general markets from a macro perspective. So let's go ahead and get into some of the earnings. Now, make sure you guys are sticking around. I do have the weird news of the day coming up in about 20 minutes. So make sure you guys are sticking around for that. It's kind of fucked up, but it's really weird. It's really strange. You're not going to miss it. It's one of the weirder news. It's kind of a weird news of the day, but it's out there. And then, of course, we have birthdays towards the end of the show. So make sure you guys are sticking around for the whole stream. We'd love to have you guys have some fun with that. And so let's go ahead and get into lows. So here's your lows chart. Oops. Right here on the daily. Let's go to the 5-minute just to give you some real-time moves on that. It is just barely in the green. Here's your 5-minute chart on Lowe's. We already heard from Home Depot, and it wasn't great. And Lowe's doesn't seem to be all that different. However, it is hanging on to some green here. They did end up lagging some expectations here. They reported mixed earnings for Q4. Lowe's came in non-GAAP EPS of $2.28. They did beat that number by 7 cents. Revenue came in at $22.4 billion, a 5% increase year over year, but missed expectations by about $310 million. Comp sales for the fourth quarter decreased 1.5%, and comp sales for the U.S. home improvement business decreased 0.7%. Not much of a big surprise there, especially since we just saw news this morning that housing demand is at a 28-year low. Which is interesting. I don't know. It's hard to determine if housing demand is down because there's just not many houses out there to buy. So inventory is so low that people just are waiting around for their dream home to buy because there's not much out there. Or is it the 6.5% interest rate? I'm sure maybe it has a lot to do with that, more so than the former. But I think there's probably a combination of both you can make arguments for. Would love to get Don's take on that too, as he is a real estate agent. But Don from the Don Franz Show, hopefully he hangs out with us this morning. But nevertheless, not really much of a surprise here. The company is introducing its outlook for fiscal year 2023. It's a 52-week comparison to full year 2022. Total sales of approximately $88 to $90 billion versus 90.66. So that is also missing consensus there. Comparable sales expected to be flat to down 2% as compared to the prior year. Operating income as a percentage of sales, operating margin 13.6 to 13.8. Effective income tax rate of approximately 25%. Diluted earnings per share of $13.60 to $14 versus the $13.84 consensus. So that's coming in line. Capital expenditures of up to $2 billion. So it's not great. The only positive thing is they came in and beat earnings per share. The outlook here isn't good. They actually are talking about a slowing of growth. But this, again, doesn't necessarily surprise me a whole lot given how things are. There isn't a whole lot of people out there. I mean, we saw massive home improvement demand over the last 2.5-3 years. And so it's no surprise that we're seeing this kind of sector really take it on the chin and slow down a lot. The surprise will be when they actually beat expectations. We'll see. Is Lowe's setting the bar low? No pun intended. Or are they on to something? And then you have Kohl's that came in and they reported earnings today as well. Not good for them either. The stock's down 7.5% off of their earnings report. I was not going to react to these earnings at 7 in the morning. I wasn't going live at 7 in the morning. Sorry, guys. Just not going to be a thing. I am not a morning person. So feel blessed that I'm gracing your morning. But nevertheless, margin contraction here is one of the big reasons why Kohl's is down. For the fourth quarter, the company posted $2.49 loss per share, missing expectations by a stunning $3.46. They're expected to come in profitable, and they came in for a loss, and not by a little, by a ton. The report of $6.02 billion in revenue also came up narrowly short of estimates, while a 6.6% decline in comp sales for the quarter was steeper than the 4.71 consensus estimate. Gross margins contracted 10.2% from the prior year due to clearance markdowns and persistent cost inflation. Promotional activity was cited as driving 7.5% of the margin contraction. I mean, the margins were already thin anyway on Kohl's, and so that's just not good. Kohl's fourth quarter sales results reflect meaningful proactive measures we took to better position for 2023, and that's coming from the CEO, Tom Kingsbury. He said we're refining our strategy and reestablishing merchandise disciplines with customer-centric focus across the organization. Kind of a bullshit answer. Moving forward to 2023, the company anticipates a 2 to 4% decline in net sales as compared to 2022. So, and this is another head scratcher. I mean, retail has been all over the place. We saw amazing numbers from Under Armour, right? We saw good numbers from Nike, TJX had great numbers. TJ Maxx and Marsh. So it's really difficult for me to kind of figure out what's going on in retail. Like, are we actually seeing a slowdown, or are we seeing, is this a macro issue, or is this an issue in which we are seeing, I don't know, just pockets? Maybe is this mismanagement, right? From other companies. I really don't know the answer here. It's certainly becoming a huge head scratcher because it's so mixed right now. Like, are certain brands or certain companies just not getting it while others are? Or is this more of a macro issue in which we are seeing demand and it's just only hitting certain pockets for right now and it's going to be a broader stroke? I really don't know the answer to that just yet. So, another confusing earnings from Kohl's. And I mean confusing just because of how it affects the entire sector of retail. I mean, it's just wild to me. Wingstop, right? We saw Wingstop have incredible earnings, and that stock went nuts off of those earnings, and it's still going crazy. Oops. We take a look at Wingstop. And so I'm bringing up Wingstop just because from a consumer standpoint, they did great. So the real conundrum is like, okay, what is it that consumers want right now? Is it experiences? I mean, we saw travel do quite well. Hilton and Marriott and even Airbnb all crushed their earnings. So it is a bit of a, like, what the hell's going on? Type of situation. I really am at a loss as far as like where the consumer is and where the demand is. I'm confident that we're going to see a good return on the markets this year. I actually don't think that we're going to see a recession at this point, or that if we do, it's going to be very mild, very short, and we might not even notice it. But I'm just kind of trying to figure out where people are putting their money, and it's a bit confusing at this point. Year to date, you look at Wingstop, it's up 27, almost 28%. That's after their earnings already came out. Over the last 52 weeks, it's up 21%. And this is just a simple, wing restaurant. It's like a Buffalo Wild Wings. Wendy's came in today, and this is also interesting. Wendy's came in today. They came in earnings per share of 22 cents. Here, let's go ahead and take a look. I'll pull up the chart on Wendy's. Ticker symbol WEN. Here's your 5-minute chart. That stock's up around 0.5% right now. They actually beat earnings too. So, if you are worried about a recession, there probably wouldn't be this much demand for people going out to eat, right? Non-GAAP earnings per share of 22 cents. They beat that by 1 cent. Revenue came in at $536.51 million for the quarter. They beat that by about $2.5 million. And the increase in revenues resulted primarily from higher sales at company-operated restaurants, given by the favorable impact of acquisition of 93 franchise-operated restaurants in Florida during the fourth quarter of 2021, and higher same-restaurant sales. Adjusted EBITDA of 530. This is your guidance for 2023, 530 to 540 million. I think that comes in line. 95 cents to $1 versus $1 consensus on earnings. Cash flow from operations 340 to 360 million. Like, these are all halfway decent numbers. So it's clear that like people are still going out to eat. That's where they're certainly spending the money there. I don't know. Let me know what you guys think about this. Chris Edwards says that I think retail has to slow down at some point as American debt is going up like to crazy levels. Yes, I agree with that to a certain point, but we've got to remember that there's a lot more money in the system now too. So I'm not disagreeing with you, but I think that there's certain factors here that also, when you see those numbers as far as debt increases and credit card balance increases, that there is a lot more money floating around in the system too. And who knows where that goes at this point. But I don't want to discard or discredit that fact, Chris, for sure. But those are your Wendy's numbers. Let's take a look at NIO right now. Somebody earlier this morning asked about NIO's, if it's worth grabbing the dip on. So far, it's not doing so hot this morning. It's down around 1.5%. Here's your numbers. I mean, the EVs have just been getting hammered lately. The EV is not named Tesla. They missed. NIO did, rather. NIO came in at a loss of 44 cents. They missed that estimates by 21 cents. So they missed it by a lot, by double. Revenue came in at $2.33 billion. That's a 62% year-over-year increase, and they missed that expectation by $230 million as well. Vehicle sales were 2.139 million in the fourth quarter of 2022, representing an increase of 60.2% from the fourth quarter of 21 and an increase of 23.7% for the third quarter of 22. So solid growth still. Vehicle margin was 6.8% in the fourth quarter of 22 compared with 20.9, or we'll say 21% compared to 2021. Vehicle deliveries were 40,000 in the fourth quarter of 22, consisting of 20,000 premium smart electric SUVs, 19,200 premium smart electric sedans, representing an increase of 60% from the fourth quarter of 21 and an increase of 26.7 from the third quarter of 22. I just don't get NIO, and I don't get why people love them so much. I understand the growth here is, you look at it from a percentage standpoint, and people were just mind blown. But 40,000 vehicles, that's nothing. Look at the competition that NIO has right now in China is Tesla, BYD. Those are the giants. Those are the monsters. I just think that NIO at some point gets gobbled up by one of them. I don't know how NIO survives without getting bought out. And then to come in for losses like that, significant losses despite the growth, I don't think that it's great. Now, I will say that growth and that production is far better than what we're seeing from like a Lucid, right? Or even from what we saw from Rivian, even though I didn't think Rivian's earnings were all that bad, relatively speaking. I think that this, in my opinion, just isn't worth going after. There's so many better, like, just go buy Tesla. Tesla's up 100% since what, October? Why are we farting around with NIO? Year to date, Tesla's up 90%. So in the last 2 months, you could have just bought Tesla instead of farting around with NIO. You know what I mean? Like, why are we wasting our time on this? NIO is flashing a nice divergence, says Z Writer. A bullish or bearish divergence? And on what time frame? Let's take a look. Stocks coming down. I'm looking at RSI. Stocks coming down RSI is starting to go up a little bit. Maybe there's a bit of a divergence there. This is your daily chart. Not really much I'm liking here either, to be honest with you. 928 is what we're sitting at. 838 is where we saw this spike down at it back in October. And it's just kind of been sideways for the most part since then. I'm not really digging this at all. At all. I mean, wouldn't you rather own this? This is also why I scratch my head as to why Warren Buffett buys Chinese EVs over Tesla. Bet on America, he says, right? Yet he won't buy an American EV company. That always has blows my mind, I should say. Oops. I did not mean to do that. There we go. I'm trying to get rid of these. I forget how to do it. It's so annoying. Oh, here we go. Indicators, technical. Is it in here? Yeah. I wish it would just save it. Like I never want those. It's dumb. If you guys ever hung out on Webull, they give you like, they identify, maybe it's like a form of AI. They identify like patterns and stuff in charts that maybe you can utilize, but I just kind of think they're BS. Tesla's up 0.5% today. We'll see. It was down 1% yesterday, but listen, I just don't understand why people don't buy Tesla at this point. Zero says, I like NIO for trading. That's fair. If you want to just flip it, fine. Makes you money. It is what it is. Maltagoya says, what do you think about bank stocks right now? Specifically, Capital One seems to be reasonably priced with a 5 to 6% dividend too. Let's get to that on the other side of the weird news. I like that question, Maltagoya, so I hope you're sticking around. But I want to get to the weird news of the day. This is very interesting, guys. We'll keep an eye. I'll pull up the SPY chart as we are talking about this. I'll put it on the 5 minutes so we can kind of get that real-time action on the open here. We got about 3 minutes before the open. SPY's still down around 0.25%. That is your S&P 500 ETF. The Qs here also are down very slightly. It's basically flat here, but it was up. It was up at 295, now sitting at 293.23 this morning. So we'll keep an eye on these as we get into the weird news of the day, but this is very strange. So a recent study came out. Is it a study? I don't know what to make of this, but I'll show you guys in a minute. So stick around. The visual here is just going to take the cake. So this person came up with a solution to long distance relationships via a virtual kissing machine. It's a dude in China. Says the Chinese device now lets people share a kiss through 3D technology. Have you guys ever been in a long distance relationship? Would this be something that you would do? A remote kissing device has been created by a group of university students in China for people in long distance relationships. The 3D silicone gadget has a mouse-shaped module and is triggered through a kiss, which is then transferred to the mouth on the other side. I have video of this. Just give me a moment. It mimics the movement, temperature, and pressure of the kiss during the sensors and links to phones via Bluetooth and an application. The device, which was created by a group of university students in China, has been met with criticism excuse me, on social media. Some users call the device weird, no shit, while others found humor in it, saying that the device convinced them that having a long-distance relationship is a pretty bad idea. According to Global Times, a state-run media outlet, the invention has been patented by this vocational institute in China, and the co-creator says, at my university, I was in a long-distance relationship with my girlfriend, so we only contact each other through the phone, and so that's where the inspiration of this device originated. And I want to show you this device. It is quite interesting. I mean, how desperate do you have to be to to use this? Here it is. Are you kissing that right now? Oh yeah, look at this. Oh yeah. Yeah, baby. I can't wait to see you. This is so great. I don't even miss you anymore. Is that going to satisfy your long distance issues? That is your weird news of the day, guys. Crazy. Crazy. Listen, I told you it was going to be weird today. I don't call it weird news for nothing. Anton Sigursky says, just a kiss for now. You know, that is a very good point. Because, like, listen, we're seeing Tesla come out with robots, right? Like, what if there is, like, this long-distance robot that you can, like, have sex with somebody halfway across the globe, right? I mean, that is weird as hell. And the whole concept is still weird as hell. And I would, like, but this is definitely the beginning, right? I feel like this is definitely going to evolve into something super fucked. Alan says, I bet they kiss with a mask on. Eric F. says that Nigerian prince in Africa will send you a kiss when you send him money. For sure. Chris Edwards says, who the hell would use this? Somebody very desperate, Chris. That is your weird news of the day, guys. That is your weird news of the day. Bodie Beard says it would work for a lady. It could work for a lady, or depending on how the mouth is set up, could work for a dude too. Let's not discount that. Oh shit. Anyways, see, this is why the weird news of the day is perfect for this show in the morning, because it's like, all right, we get all the stock market stuff out of the way, and we're breaking it up, and then we're having a good laugh, and then we're getting right back to it, right? So let's go ahead and get right back to it. The market's open right now officially. Looking at the Qs, and they're basically flat this morning. SPY is starting to get bought up a little bit, but not much. We got some pretty decent volume coming in here, and it may start to go green. The move down was off of manufacturing numbers that came out at 8:30 this morning, so we saw that move down. We'll see how the rest of the day shakes out. Tesla also getting a move on ahead of Investor Day. I will be live for that at 4 p.m. Eastern time. Or I'll be live at 3:45. They will be live at 4 p.m. Eastern time. Wendy's actually picking up here off of their decent earnings. Not really a whole lot of volume to speak of, but it is moving in the right direction. First Solar reported ridiculous earnings last night and now is up 7.5%. Rocket is up 2.5%. Loving that. Make sure you guys are sticking around to the end of the show for birthdays. You're not going to want to miss this. I promise you, you will regret. You will be so mad if you do not stick around to the end of the show to hear birthdays. I got a special one. For you. Speaking of that, Alan. Oh, man. So, I was headed somewhere. Oh, we were talking about, see, look, I got myself distracted, and Malta Goya had asked about Capital One and about the banks in general. So let's take a look at that. Let's take a look at the XLF. By the way, Malta Goya is a Chaos Crew member. So, of course, I'm going to show him some love. If you guys want the same, go ahead and check out that join button next to subscribe. We'd love to have you guys as a part of the crew. Help support the channel. Help things keep going here. You guys are enjoying the mornings. You love the afternoons. You're going to love being part of the Chaos Crew. Hit that join button next to subscribe. Also, if you want even more of the chaos, you want my watch list that I put out once a week, and you want more private streams, as well as Don Fron from the Don Fron shows, trade alerts, as well as access to our Discord, all kinds of goodies in there. It's $5 a month starting out. Go ahead and check us out at patreon.com/ownthechaos. Help support us there. Link is in the description. It is a great community to be a part of. Lots of invaluable info in there, especially in the Discord. So go check us out. Would love to have your guys supporting that way. But I'm pulling up the XLF. Let's go ahead and take a look at the weekly, actually, to start there. I haven't looked at the XLF in a minute, but you can obviously see that the last time that I did, I was charting out quite a bit on the XLF. So if you guys aren't familiar with the XLF, this is a financial sector ETF, and it's a SPDR ETF. I think with the hike in interest rates not only from the housing standpoint, but the federal funds rate certainly is going to help out the banks in general, and it has so far. I mean, you look since the bottom here in October, from what we saw, even in the overall market, was kind of represented a bottom for the financial markets as well. And I like it. I like it still. We can mark out a pretty decent higher low trend here. Look at this. Bounced right. The XLF bounced right off of the 200-week moving average, and we're still seeing higher lows. Certainly seems like a break in the trend to me, breaking the downtrend. I mean, look at that. There you go. So fundamentally speaking, I think that there's a lot to like here. And it really kind of held this bottom for the most part at around $30. The XLF did. Now, as far as Capital One, I don't know enough about Capital One fundamentally to really give a formal opinion on it. I'm just not educated enough on Capital One. But I do like Visa and I do like American Express. And, somebody had made mention of the increase in balances on credit cards, some numbers that we hadn't seen ever, some pretty decent, crazy numbers that we're seeing as far as credit card balances are concerned. And so it wouldn't be surprising to see the credit cards continue to do extremely well. But I don't think that we should discount something like a Bank of America, for example. The stock's been kind of chilling out down here, and I think that we could see a pretty decent move on this one as well. The actual banks, Goldman Sachs, also very much in that category. Still very undervalued. Goldman Sachs is ridiculously undervalued. You look at the forward PE, the valuation on Goldman Sachs is stupid. It's stupid. It's sitting at 10 times next year's earnings. That's it. Over the last year, it's outperformed the S&P 500. It's up to almost 3%. The year to date, it's only up 1.25%. I think it goes higher towards the end of the year. I do think that. We take a look at Amex, for example. That ticker is AXP. I'll pull it up on the chart here in just a moment. Here's AXP. Now, there's certainly a lot of concern here. Again, this is your weekly chart. Certainly a lot of concern, right? Because a lot of analysts are concerned that these balances are going so high that at some point they're going to crash and that people just aren't going to be able to pay their bills. And we'll see, right? I mean, unemployment is still at a ridiculously low number. People are still out there making money. They still have jobs. So until we see the jobs fall apart, I don't think that we see the credit card companies fall apart. American Express has a forward PE of 15 times next year's earnings, which is still very attractive. I mean, you look at the S&P, that's around 16 times next year's earnings, so slightly below. Year-to-date, American Express is up 18.5%. Over the last 52 weeks, it's actually down 10.5%. But I think that there's a lot to like here still. I mean, we just saw a lot of the travel numbers were extremely good from the airlines, from the hotels. People out there spending money on experiences. Make no mistake about that still. So I hope that helps at least a little bit, Multigoya. Again, I didn't talk directly about Capital One, but just the sector and overall perspective on this. I hope that helps. Chris Edwards says, "Are you still holding Rocket?" No, I'm not holding Rocket anymore. I haven't had that for about a year. Don Fran Show says, "Ford dividends don't pay until the end of the day. How annoying. It's my money and I need it now." Yeah, Don Fran, I believe, and correct me if I'm wrong, Don, working a wheel strategy on Ford. Been doing that long term. Bodie Beard says, "Quick question on the Fed rate and credit card rates going up, as well as does that increase car company profits?" Let me read that again. On the Fed rate and credit card rates go up as well. Does that increase the car company profits? Yes. But I don't think it's as much as you would think. It's more credit card companies and interest rates, they're going to do well based off of demand, period. But either way, I still like American Express. I still like Visa. Those are the top two credit card companies, in my opinion, that deserve attention. And Visa has been doing phenomenal too. Over the last 6 months, Visa has been on fire. We go to the 6-month performance on Visa, and it is up. Now, it's up 10%, but for a credit card company, that's pretty damn good. Since October, it's up 10%. This one actually is expensive. I just got done telling you American Express is at 15 times. Visa is at 26 times next year's earnings, so still quite expensive there. Checking back on the poll. So I put in today about the Tesla Investor Day event. So if you guys are interested in reacting to the event with me, I'll be live and I'll be streaming that as well, Lord willing. But 46 of you have come in and voted on today's poll, and a large majority of you say that it's going to help the stock. 17% say it's going to hurt. 33% say it does nothing, and a small percentage of you say that you do not care. I am interested to see how this actually does play out. Most of the time, we don't see much of a reaction from Tesla stock, or really even anytime a company has like Investor Day, right? Like NVIDIA, I think 1 or 2 times we saw NVIDIA pop on some crazy news that just nobody knew about, and it got released. If we get surprised by something, then I think Tesla does pop. If we don't, and we get filled with empty promises and some outlandish timelines like we have in the past, then I think that it's actually could potentially disappoint. It's down around 1% right now. If we're supposed to hear about robo-taxis, if Elon comes in and says that, we're going to get it this year, I'm just going to laugh hysterically. It's just going to be an absolute joke. I would expect some sort of conversation surrounding around AI, and I think that's probably going to be a heavy part of the narrative this afternoon. And if that happens, then Tesla could indeed actually move up on that news. We'll see. There's usually no shortage of surprises on investor days, with the exception of Battery Day. I mean, I know that I keep talking about Battery Day, but it was brutal. I have PTSD over it. It's so bad. It was so bad. Savvy Money Show says, I want HUBC to run today. We will get this year, but from which company? Yeah, that's a great question. A great question that we have to just kind of wait on getting the answer for. Any good picks in marijuana? Eric F asks. Not really, man. I love that we're making strides to legalizing this. CGC, if I had to pick one, is the one that I would go after. And the only reason is because it's backed by Constellation Brands. No other company out there has that, but it's at $2.30. This is a $20, $30 stock. It was $56. Jesus Christ. It was $56 2 years ago. Now, $2.31. That's just brutal, man. That's just brutal. I guess if you're not going to bet the farm on it, right, and you want to throw something out for speculative reasons, I mean, they always tell you not to ask yourself how much worse can it get, because it can get a lot worse. It's not going to take much to cut this stock in half, right? But it's certainly down to a level that is attractive. Make no mistake about that. But the weed industry as a whole has just been in shambles. It's been tough. It's been really tough. But yeah, CGC, if I had to choose one, gun to my head, that would be the one I'd go with. Okay. So that's going to do it for today's show, guys. Thanks so much for tuning in. I certainly appreciate it. You guys have been fantastic. And thanks for sticking around for birthdays. We got some really good ones today. Justin Bieber is 29 years old. That's so crazy. He's 29. Kesha is 36. Jensen Ackles is 45. Tyreek Hill is 28 years old. And guys, I have a very special birthday today. Georgina Spelvin is 87 years old. She is best known for Babes in Joyland, Teachers and Cream, Indecent Exposure, Oversexposure, and this was from 2012. She's 87 years old. At this time, she was 76. How's your bush in 2012? Happy birthday, Georgina. And thanks, guys, for tuning in. We'll see you all tomorrow, or this afternoon, 3:45 p.m. Eastern time. Make sure you hit that notification bell to get notified when I go live. I hope to see you guys this afternoon. And that's going to do it for today's show. Love you all. Enjoy the rest of your day.